with that and move on to Gokwik, which is an e-commerce enabler that has announced the acquisition of Return Prime, which is a global returns management app in the Shopify ecosystem. This marks Gokwik's entry into the international markets of UK, Europe and the US, where it aims to onboard 10,000 plus new merchants in the next 6 to 12 months. For more on the synergies from this acquisition and how it will enable Gokwik's growth going forward, I have with me the co-founder and CEO of the company, Chirag Taneja. Also with me, my colleague, Arundhati. Chirag, thanks very much for your time here on CNBC-TV18. Let's begin with what motivated Gokwik to acquire Return Prime. How will it strengthen your position in the Shopify ecosystem and the synergies you see?
First of all, thanks for having me. Specifically on returns as a problem statement, I think returns is a very deep e-commerce problem statement. Is quite pervasive. As e-commerce deepens, it's going to always be there. It's going to deepen. And if you look at it from a post-purchase point of view, it's a very significant problem if you have to solve for repeats of the consumer. And from that point of view, we've always looked at it, and our foray has been that can we take our suite global? From that perspective, and then we evaluated different companies. I think Return Prime is the top three, globally the top three app on Shopify App Store, works already with 6,000 odd merchants globally in 50 plus countries, processes $100 million plus of return GMV. So it had scale, it had global presence, it fit into our suite of solving for, democratizing shopping experience and providing similar Amazon type experience on the non-Amazon world. So there are multiple tick marks. That's why, we went ahead with acquiring the company.
Right. Hi, Chirag. Arundhati just stepping in. No, if you could, you've just told us why you decided to go through with this deal. But if you could sort of, throw light on the financial contours of this deal.
Yeah, you can think of it as a multi-million-dollar deal, mix of cash and equity, spread over the next 2 years. Very value accretive, margin accretive for us from margin point of view or from a earnings point of view.
All right, still not giving us the number though. You mentioned plans to onboard these 10,000 plus new merchants in the next 6 to 12 months, thanks to this acquisition. Over a longer term, how many more merchants will the deal give you access to, and the key markets that you really want to focus on?
We have multiple levers of growth. One is, of course, international. Two is we keep building out, or we roll out like one large product every year. And then, of course, from a market share point of view, we're still, I would say, we're the largest in the space, but we are still like mid-teens is what I would say. Our type of player should have a winner-take-all kind of an opportunity. Upwards of 50% is what I feel is the opportunity. From that point of view, think about it that we would want to be 3x in a year's time, 10x in 3 years' time. That's the growth trajectory we would want to look at. We would want to end the year with 10,000 plus merchants. We are on path to do that. In fact, we've recently launched one exclusive app with Shopify on their app store, solving for COD. So that's starting to scale up really well. So that's how, and from an international point of view, US, UK, and Europe continue to be focus areas, starting with UK and Germany, and then followed by remaining markets of Europe. And then later next year, move to US. That's how we're thinking.
Right. So you've told us which geographies are doing right now is your focus area. But, if you could give us a sense of how you see Gokwik's top line and bottom line growing from where it's at currently, and what's the expected contribution to the revenues from this Return Prime acquisition over time?
We expect to be 3x, as I said, in 12 to 18 months from here. We are closer to the $25 million mark in terms of revenue. Today, Return Prime is close to 7-8% of the revenue. But I think as we scale up, my sense is this is going to surprise us in terms of both global expansion as well as contribution to the overall business, both in terms of top line as well as margin. So I expect this to be close to 15% over time.
And what will be the key drivers behind this kind of growth that you're talking about?
So think of us, as I said, that one, of course, is the global expansion. Two, market share increase in India. We are in the mid-teens. We would want to get to, over time, increase our market share. And by the way, our market is growing at more than 30% CAGR. So, in a growing market, a player like us, which is category creator / leader, that's one leg of growth. And we plan to introduce, more new products serving the same merchants, whether it is centered around different channels such as, offline or quick commerce, or going deepening into D2C as a segment. Those are the levers of growth.
So those are your key levers of growth. Chirag, we're completely out of time, but thank you so much for taking time out and being here with us on Startup Street.
Thank you so much.
On that note, it is time for us to head into a short break. But coming up next, growth capital firm Playbook Partners marks its first close of over $130 million of its maiden fund. What is their investment thesis? We tell you on the other side. Stay tuned.
For more news and updates, all you need to do is follow CNBC-TV18 on all of our digital platforms.